Hey, welcome back. It's Jason Walter here. In today's housing market update, I want to discuss a very important topic, and that is home affordability, because that's becoming more and more of an issue as home prices have continued to increase. I'm going to share some reports both on a national level as well as what we're seeing in California. And also stick to the end of this video because I'm going to share some stats regarding rental prices and how those have been affected by this pandemic. And before I dive into the video, I just want to give you a friendly reminder to please subscribe to this channel if you haven't done so already. I post videos about how this pandemic is affecting our real estate market, and I really enjoy making these videos, so I hope you're getting a lot of value out of them. Also, if you appreciate real estate market updates just like this one, please hit the like button. I greatly appreciate that. Okay, let me share my screen with you right now. And first of all, I'm going to be going over affordability in California, then on a national level right after that. And it's really interesting when you compare both of them. In any case, this is compliments of the California Association of Realtors. They just published this report just a few days ago at the time of this video. So they report that we've had double-digit home price increases and also a shortage of homes available for sale. And that has pushed California's third quarter housing affordability to its lowest level in 2 years. So here's what they looked at. The percentage of home buyers who could afford to purchase a median price existing single family home in California in the third quarter 2020, that fell to 28% from 33% in the second quarter of 2020. And it's also down 31% in the third quarter a year ago. So it's pretty remarkable that only 28% of people who live in California can afford to buy the median home price in California. It's a very low figure here. So they also say that the third quarter 2020 was the lowest since the fourth quarter of 2018. And California's housing affordability index hit a peak of 56% in the third quarter of 2012. So the time to buy was in 2012, and that was 8 years ago. So it says that the median annual income of $127,200 was needed to qualify for purchase of $693,680, which was the statewide median priced existing single family home in the third quarter 2020. However, just want to make sure you're aware of this. That was the third quarter median home price. However, according to the most recent stats we have for California, the median home price in California is actually $712,000, and that was a 17.6% increase from September 2019. And stay tuned because in a few days, I believe the California Association of Realtors should release their October stats, and I'll be sure to make a video about that. So according to CAR, the monthly payment, including taxes and insurance on a 30-year fixed rate mortgage would be $3,180 per month. And that's assuming a 20% down payment and an interest rate of 3.15%. I'm seeing personally, as I'm a realtor in Sacramento, I'm seeing a lot of people putting 3 to 5% down when they're purchasing houses. So obviously, when you're putting less money down, your mortgage payment's obviously going to be higher. So the affordability factor here would be even less, right? Anyways, it says the effective interest rate was 3.43% in the second quarter 2020, but it was 3.85% in the third quarter 2019. So isn't that interesting? We have interest rates have fallen from per quarter from 3.85% to 3.15%. However, the affordability is less. And by the way, according to Freddie Mac, the 30-year fixed rate mortgage is currently at 2.84%. So it says compared with California, more than half of the nation's households, or 55%, could afford to purchase a $313,500 median price home in the U.S., which required a minimum annual income of $57,600 to make monthly payments of around $1,400. So obviously these numbers are way higher in California, and it has some interesting stats to share with you here in just a little bit. So it says all major regions of the state experienced a decrease in affordability from both the previous quarter and the year. So when you compare the previous quarter and the year, where houses are less affordable right now, even though interest rates have been decreasing significantly, that has not made up for the fact that home prices have been increasing to record levels in California as well as the US. So it says Mono, which was 16%, Santa Barbara 17%, Monterey, San Mateo, and Santa Cruz, all 19%, were the least affordable counties in the state. So in Mono, only 16% of the people could afford to buy the median home price in California if you lived in Mono. Also, San Mateo and San Francisco counties recorded an annual minimum qualifying income of over $305,000 to purchase a median price home in the third quarter of 2020. San Mateo required the highest income in all counties at $324,000. So you had to earn $324,000 a year in order to be able to buy a median price house in that county, which is insane. I mean, that has to be the top 1% with that income. So in the San Francisco Bay Area, only 26% could afford a house there. And the median home price there is almost $1.1 million. And that would be a payment of around $5,000. And the median or the minimum qualifying income would be just under $200,000 to buy a house in San Francisco Bay Area. When you compare that to the US, 55% could afford the median home price, which is $313,000. That is a record high. I should have stats for you in about a couple of weeks for October stats, but that's as of September. And the median qualifying income in the US is $57,000. You compare that to San Mateo, the median income required is $324,000, which is absolutely insane. In San Mateo, the median home price is $1.8 million. And your monthly payment on a $1.8 million house would be $8,100 per month. On the other hand, in Lassen, which is in the far north of California, 63% could afford a house there. That is a median home price of $239,000 with a payment of about $1,100. And you only needed $44,000 in order to qualify for the home there. All right, so that's what we're seeing in California. Let's go over what we're seeing on a national level. So the National Association of Realtors also just released this report just a few days ago as well. They said every metro area tracked by the National Association of Realtors, or NAR, during the third quarter of 2020 saw home price increases from a year ago. Every metro area saw home prices increase. And that is due obviously to record low interest rates and also a depleted housing inventory market. So right now in the US, I believe we have 19% less houses available for sale compared to 1 year ago. So the median single family home in the US grew year over year in all 181 metros that were tracked by NAR. And Lawrence Yun, who's NAR's chief economist, he said housing prices are increasing too fast. That is affecting affordability because home prices are going up at a much greater rate than interest rates are going down. And honestly, I don't really see how much lower interest rates can get. We're at 2.8% for a 30-year fixed rate mortgage, which is absolutely insane. I really don't see that decreasing much. But I do foresee that home prices will continue to increase if inventory does not increase as well. So they say 65% of metros, which is 117 areas out of 181, witnessed double-digit price growth from 1 year ago. And in comparison, only 15 metros recorded double-digit increases in 2020's second quarter. And the biggest gainers in the third quarter in the U.S. were Bridgeport, Connecticut, a 27% increase of home prices, which is absolutely insane. Then Crestview, Florida, Massachusetts, Kingston, New York, Atlantic City, New Jersey, Boise, Idaho. Obviously, a lot of people are moving to Boise due to the affordability. Houses there tend to be a lot cheaper than in other areas of the U.S., especially compared to San Francisco and New York, of course. Other areas would be Wilmington, North Carolina, Barnstable, Massachusetts, Memphis, Tennessee, and Youngstown, Ohio. We all had the biggest gainers in the third quarter when you're looking at home prices. The nation's median single-family home price climbed 12% on a year-over-year basis, and the median home price, of course, in the U.S. is $313,000, and that, of course, was led by the U.S. So it says at this rate, home prices were growing 4 times as fast as median family income, which was only 2.9%. So home prices are increasing at a much, much higher rate than people's family income. So that's further causing issues with affordability, right? So 8 of the America's 10 most expensive metro areas are located in the West region. No big surprises here, but San Jose, California, median home price, $1.4 million. San Francisco, around $1.1 million. So according to the National Association of Realtors, it says the monthly mortgage payment on a typical existing single-family home that it's financed with a 30-year fixed-rate mortgage and 20% down rose to $1,059 in the third quarter. When you compare that to last year, it was $1,032. So obviously the monthly mortgage payment on average is increasing, even though interest rates are decreasing. So obviously a solution in order to mitigate this affordability crisis is to increase inventory. And one of those things, of course, would be to transform raw land into developed lots and build more houses. Okay, let's go over a report from Zumter, and they have their national rent report for November 2020. And so San Francisco is leading the pack here. For a one bedroom, the median rent price is $2,800 per month, and New York City is close behind of around $2,500. And Zumter also has a really good graphic here, and this is their national rental price index, and it shows that it's been increasing during this pandemic, actually increasing ever since June. However, more recently in July, it has been decreasing for their rental price index. What I found really interesting though is that right now, this is as of November, this is their rental price index is actually higher than when this pandemic begun, right around in March of 2020. So rent prices, according to their national price index, are still higher than it was early on during this pandemic, which I found very interesting. Also, what I found very interesting on their website here is that they talk about their top 5 rental markets, and I'm gonna be going over the first 2, and that's San Francisco and New York. So they say here in San Francisco, for a one bedroom, the median price actually dropped 1% when you compare it to the prior month. However, they're down 21% from last year. And in New York, the one bedroom median and 2 bedroom median were down 15% and 17% from last year. So we're seeing people fleeing New York City and San Francisco, for example, and that is causing rental prices to go down. Zumter also reports notable changes this past month, and they have a list of the top 5 regions in the US that had upward or increasing rent prices, and that is in Anchorage, Alaska, Richmond, Virginia, Providence, Rhode Island, and Chesapeake, Virginia, as well as Scottsdale, Arizona. And the top 5 metros that have the biggest decreases in rents would be Oakland, California, Honolulu, Hawaii, San Jose, California, Irvine, Texas, and Baton Rouge, Louisiana, and Milwaukee, Wisconsin. And that is today's housing market update. I hope you got a lot of value out of this video. If you did, please hit the like button. I greatly appreciate that. And also subscribe to this channel if you haven't done so already. I post videos about how this pandemic is affecting our real estate market, and I really enjoy making these videos for you. Also, you can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day, and look forward to seeing you on the next video.